Hi everyone, welcome back to my channel. So today's video is all about understanding sector ETFs and specifically how these exchange traded funds have different purposes depending on your strategy. So jumping straight into it, y'all can see here I have XLK pulled up on the chart. And of course this is classified as the S&P's ETF for the technology sector. So it's definitely a popular choice, especially if you have an interest in investing in emerging technologies, because clearly it's pretty cost effective. You can see that the share price is $283.78, at least at the time of filming this video. Now at times, I must admit when I'm mentoring new traders, when I mention sector ETFs, I've noticed that these are some of the most overlooked funds. However, they do provide both passive investing and short-term trading opportunities, because for the most part, they give you access to one, having built-in diversification and industry-specific momentum, along with any type of clear rotation patterns, and additionally, they do provide stable long-term compounding over time. Now with that in mind, that's also where the real power comes from, because the same exact ETF can behave long-term and short-term depending on momentum, on the ways in which you utilize it. And for example, long-term investors, they use sector ETFs for slow structural growth, and it's not necessarily for intraday movement on their end, because their priority is exposure, not necessarily quick timing. So when analyzing the exposure to leading industries with XLK, for example, of course this is going to capture a high growth innovation over time in the tech sector. And then XLY, for example, is going to focus on consumer discretionary. Now under this ETF, the benefits are from economic expansions and any type of rising income, and in many ways it's also a measure of consumer confidence. XLF, on the other hand, is going to focus on financials. So you can look at the ups and downs on interest rate cycles, and you can analyze any type of banking stability under this ETF. Now, obviously, over decades, sector behavior reflects economic cycles, and it's not just intraday volatility. So you can gain those passive investing benefits, one from just DCA steady contributions, and then of course the dividend reinvestment factor, because these ETFs are more so allowing you to stay focused on exposure to structural economic growth, not necessarily seeking a perfect entry every single time, although of course that is ideal. But it does give you that flexibility of knowing that it doesn't have to be perfectly timed. Now, on the other hand, some traders use these ETFs for short-term opportunities, because the focus can actually be on momentum, rotation, and the volatility that they do provide. Now, some are obviously more volatile than others, just depending on the sector. Now, specifically for XLK, for instance, when money flows into tech, XLK moves aggressively. And one important tip to keep in mind is that if XLK leads, QQQ will usually follow. And this is why it's always good to watch the relative strength, because if SPY on the other hand is flat, but XLK is pushing new highs, this is going to give you the indication that tech rotation is leading. Now, when analyzing financials on the other hand, XLF often leads SPY's direction, and if XLF lags, SPY's rallies weaken. Because essentially what this means is that when XLF is red while indices are up, this is usually a clue that financial pressure may drag the market. And then taking a look at discretionary spikes, when XLY shows consumer sentiment, it can give you the clue before individual tickers react. So if XLY surges, risk tolerance is increasing. Now, traders can use these sector shifts as confirmation tools. I wouldn't recommend using them singularly, however, they are good indications. And if you do know how to read these clues accurately, this can create the awareness of high probability setups, because trends can form faster over individual stocks when they are collective in an ETF. Now, the benefit in knowing this is that sector ETFs trend smoother because they blend multiple companies. So it's basically like less noise because it equals easier price action reading. And that just means you can anticipate stronger trend continuation, more projected pullbacks, and clearer breakouts. And this is ideal for traders who want direction without single stock volatility holding too much weight. Now, in options trading, there is an advantage on understanding that you can look at reasonable spreads for these sector ETFs, because there's typically going to be a clear direction on liquidity, as well as any type of strong correlations with SPY or QQQ. And this just opens up the door for you to have more projected news risk. And if you need to be risk adverse, you can definitely make that decision. This even leans to understanding trading the IV crush after sector news, and you can use the information to hedge against single stock risks, because these types of signals and clues can help traders stay ahead. Because for the most part, you're just gaining awareness beyond buying and holding. Now, it may be a good idea if you are a beginner to have the RSI pulled up. That way, if you aren't well versed just yet on how to read the charts, you can still have at least a clear indication on the direction that it may be headed. Because sector ETFs often show institutional flow before company tickers. And if you happen to see any type of unusual volume, let's say on XLY for example, this can also hint at the fact that maybe Tesla, Amazon, or even Starbucks may be trending in a similar direction. So always make sure that you're watching for key levels and look for any types of breakouts or rejections. And you can use the EMAs for this or even the VWAP. But on a foundational level, it's important to understand supply and demand zones. The reasoning for that is that these levels will guide the entire sector's direction and therefore dozens of stocks inside it. So it's basically like reading the big play inside the internal system. Now, another factor of this is that you can use this information to study any type of sector divergence. So let's say that you're one to trade QQQ pretty often. If QQQ is rising, but XLK, for example, is lagging, this is going to tell you that tech momentum is weakening. And if you're trading SPY and you see that it rallies, but XLF, for example, drops, banks are more than likely under pressure, and this can often serve as a warning, because that type of divergence will help traders avoid false confidence and refine the timing of your entries or exits. So if you're trying to decide on how you can build a complete plan using both approaches, you always want to make sure you're examining the exposure across all sectors. In my opinion, I always like to look at XOK for growth. I analyze XOY for consumer cycles. XLF, of course, is going to be for the financial outlook. XLE, along with XLV and XLI, are going to be for diversification purposes. And this can be used in order to balance your portfolio. Because remember, you can always have automatic contributions and quarterly rebalancing in order to make the numbers make sense for you. So definitely keep in mind that these same ETFs can, one, provide trend confirmation. So if you're short-term trading, you can definitely use these for scalps, hedging positions, and just anticipating momentum trades. Because oftentimes you'll notice that they have short bursts of volatility with rotation. And this is always usually found at a breakout or breakdown level, because the moves are pretty quick and tactical in many ways. So together, a portfolio can become pretty balanced because one, it offers that long-term stability plus the short-term opportunity, which will always equal sustainable growth if you play it right. Now, specifically, what I also like about the benefit of trading sector ETFs is that it removes a lot of the noise that new traders may struggle with. Because one, there's no earnings surprises with these since they're not individual stocks, and therefore there's not a single company that can majorly affect the numbers. So the charts pretty much will show you the structure of what's truly going on behind the scenes in the market. And that in itself provides better alignment with SPY and QQQ's movement. And this is perfect for new traders because you get full knowledge to understand the flow, rotation, and you can even get trend confirmation without having to study some of the volatile tickers that are in these ETFs. So you get pretty good risk management with that in mind. So for me, what matters most is the dual purpose. Because of course we know that the stock market goes through economic cycles. You can generate consistent income through a strategic plan for rotation and your trend structure. Because again, it's all based upon momentum. So when you understand both sides, you can better anticipate the market motion. Okay, so last thing that I want to mention in this video is just a full list of all the S&P 500 ETF sectors. That way, if you need to reference back to this video, you can quickly use this for a comparison. So of course, starting it off is going to be XLK with tech. XLB is going to be materials. XLE is going to be energy. XLF, of course, is financials as mentioned. XLI, of course, is going to be industrials. And this can be classified under everything from manufacturing, aerospace, and even defense and transportation. XLP is going to be consumer staples. XLU, of course, is utilities. XLV, of course, is going to be healthcare. And then XLY is going to be consumer discretionary. So this falls under the category of anything under entertainment, like retail, travel, all that good stuff. And then XLC is going to be communications. So any type of media, social platforms, telecom, all of that will fall under this category. And then last but not least is going to be XLRE, which of course is going to be real estate. So certainly you want to think of REITs, property management, and even real estate services. All of that will fall under this sector. So yeah, y'all, that's all 11 sectors. And with that, that'll pretty much do it for this video. If you found any of this information to be helpful, feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.